Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario where we have a finished regular flat corrective structure in a 335 ending wave C on top of the 1-to-1 trend-based fib extension taken from the high to the low of A to the high of wave B. In this scenario, we are then looking for impulsive continuation on the lower time frames, which on the 50-minute time frame is reflected like this, where we have a finished wave 1 to the upside, an impulse, potentially a finish 2 or a bigger wave 2 and a flat, after which we want to see continuation to the upside. The common target for a wave 2 is the 0.5 to the 786 Fibonacci, which is taken from the low to the high of wave 1, giving you a target area between 62.5k and 60.8k. The 382 is a less common target, but a target nonetheless, and especially in stronger trends, the 382 is an important level at 63.2k, which has been hit as you can see, and the 886 is a very rare target for a wave 2 and actually a level we don't want to hit. However, based on time, it is preferred that the low of this wave 2 is already in. You can see the vertical lines on my chart, and these are fib times taken from the low to the high of this wave 1. Preferably wave 2 finishes before the 4 fib time. The moment price is crossing this vertical line here, the probabilities go down for price to be a wave 2 the moment it would take this high. And if price would make a new low, taking this one over here, after the 5 fib time, well, that would be very rare for wave 2, so it does increase the probabilities for potential continuation to the downside. We do have another bullish scenario, which is a flat, as I will show in a second, after which we then look for support, proof of support and continuation. It's just that the probabilities for a wave 2 go down, so if price then does make it over here towards the common target area for wave 2, we have to be very careful, very patient, and look for proof of support in this area, whatever that is for you, right? That can be a market structure change, bullish CVD, RSI, or whatever other indicator you are using, but something that gives more confidence for price to move towards the upside. We do have some resistance and some support nearby price at the moment. The resistance here is just above price, 65.7k to 66.3k, and the support area here is around the golden pocket, 61.7k to 62k. Now, as mentioned, the alternative bullish scenario would be a flat structure where we have our wave 1 and then we have a 3-wave 2 in a flat. Now, the most common flat structure is an expanding flat, and for an expanding flat, we want wave B to move inside the yellow area, which is the 1.236 to the 1.38 Fibonacci, taken from the high to the low of this wave A, giving you a target area between 66.1k and 66.5k. Currently, we hit this orange area over here, the 09 to the 105, which is a regular flat target area for a wave B, after which we then want to see a wave C to the downside. However, a regular flat does have lower probabilities compared to an expanding flat, so it is generally preferred to look for an expanding flat first. Now, the expanding flat target also is in nice confluence with the resistance area that we have above price, and in particular with that daily naked point of control at 66.3k. So that is an important level, and also to the downside, a little bit of support here as well, 63.9k. In this scenario, we want to see an impulsive wave C to the downside to take the low of wave A, but as mentioned, it would mean that this wave 2 is long in time, lowering the probabilities for a wave 2, which therefore means we have to be careful and look for proof of support to see if price can find the strength to move towards the upside. But preferably, this wave 2 is already finished because of time. The bearish scenario, which eventually would still be bullish, but in the bearish scenario, we have an unfinished regular flat where we still expect price to take these lows before then continuing the trend towards the upside. We have a 5-wave impulsive structure in this wave C, which is not yet finished. So we have our wave 1, 2, 3, 4, and then eventually expect another 5 to the downside, where the invalidation for this wave 4 is the 0.618 Fibonacci taken from the high to the low of this wave 3, sitting at 67.3k. Now, because of price over here taking the high over here, it does increase the probabilities of the bullish scenarios, because it starts to be very difficult to count all of this price action as a corrective structure. Previously, we had a potential ABC running flat ending over here, or a WXY with a flat in wave Y also ending over here. But as mentioned yesterday during the live stream, the moment the 886 here was hit, probabilities increase to take this high, and therefore it would invalidate the scenarios for a wave 4 ending over here. Now, the only scenarios that are left for a wave 4 to potentially end here, they are not pretty, but that would still be an A, B, and then a wave C, or a WX and then a wave Y, but then this is your impulsive structure, and on the lower time frames, that would then mean this is your wave 1, 2, 3, 4, and this is a wave 5. The problem here, however, is that your wave 4 is over 6 times the length in time of your wave 2, which is very rare for a wave 4, and therefore not preferred, lowers the probabilities to end an impulse over here in a 1, 2, 3, 4, 5, and then go towards the downside. Alternatively, we have a very ugly structure, which is this triangle over here. Now, this definitely does not have the highest probabilities, but as an Elliott Wave analyst, we always need to have a bullish and bearish scenario. So here we then have in our wave 4, a wave A, B, C, D, E. Now, for this to be any sort of like valid, we at least need for this wave C price to move towards the downside before I move back towards the upside, because in a triangle, 4 out of the 5 waves need to be a simple zigzag structure in an ABC 5, 3, 5 to the up, or the downside can also be 5 out of 5. And if one of the waves is not a zigzag, it's most commonly wave C or wave D in a double or triple zigzag. But in this scenario, it would be wave B, which is extremely rare for that to happen, right? So that really lowers probabilities for this scenario in a double zigzag, wave W, X, and then a wave Y in that wave B. Now also, inside C, we then have a finished 5 wave A looking for a flat in B, and then eventually a C to the upside, where this wave C and then an A, B, C zigzag is likely going to hit only the 0.618 trend-based fib extension from the low to the high to the low, wherever that low is going to be, likely somewhere here on top of the support box, right? Maybe a little bit lower. But then the target area for your wave C is going to be the 0.618, which is a rare target for wave C. Then we still need a D, still need an E, which means that also time-wise, this scenario starts to have some problems, because this range here is going to be very long compared to your wave 2. These fib times here are comparing wave 2 with wave 4, and actually wave 4 with wave 2, of course, arguably, but we don't actually want wave 4 to end after the 6 fib time, and preferably not after the 5 fib time, because probabilities go down. So yeah, the probabilities for this scenario are not great because of wave B being a WXY, because of then inside wave C we have this move to the upside hitting the 0.618 as a target, and because of time. So that again increases probabilities for the bullish scenarios. Now, looking at the CVD divergences, we had bullish CVD divergences over here. Now, these already played out as this high got taken and that high got taken. We had a little bit of a move to the downside, and very locally some more bullish CVD divergences here. Higher low in price, lower low on the CVD, again higher low in price, lower low on the CVD. These bullish CVD divergences have now also played out as the high got taken, and then we just wait and see what price is going to do locally. And if we then look at the probabilities of the different scenarios, then on the weekly time frame the probabilities are highest for bullish continuation, where price is sooner or later taking the high at 74k, compared to the bearish scenario, where this is the top and we look for a bigger bear market and an impulse towards the downside. On a 4-hour time frame, when we talk about this range, the probabilities at the moment are highest for a finished flat structure and continuation to the upside, compared to the unfinished flat structure, where we have a wave 1, 2, 3, 4, 5 as explained. And on the 15-minute time frame, locally, the higher probability is the bullish scenario, where wave 2 is finished, and this grind to the upside could be a couple of lower degree wave 1-2s for then a potential 3 next week, compared to the bear/bull scenario then, where we have a wave A, B, and a wave C to the downside, so a bigger wave 2, and then look for a move towards the upside. And that is pretty much because of what I wrote over here. If price is going to move below this low over here at about 63.2k, wave 2 in a wave 1, 2, and then eventually a 3, so wave 2 can be a flat, but it will take a long time compared to your wave 1, and that is not really what we like to see. So therefore, if price does move below this low over here locally, we have to be aware of potential continuation to the downside to take the low. So that means that if price goes down here, we have to really look for proof of support, be very patient, look for signs of strength before then going into any longs, right? No financial advice, but you know how it works, right? Stick to your plan, stick to your strategy, and stay safe out there. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.